Let's bring in our next guest for our Cash Tag segment. That's going to be Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, we got a good topic to discuss today, and that's Tesla. Nobody likes it anymore on the street, it seems like, Andy. The stock's pulled back over 40% so far this year. I mean, do you have data that's diverging from what the stock price is doing?
Yeah, we do. I'd say Tesla, it's definitely been a terrible year. This is one of those companies that, if you're going to be a long-term investor in Tesla, I think, you can look all the way back 2015, 2016. You've got to be willing to ride the ride on the downturns in a very severe, very scary way. And we're definitely seeing that. But from the perspective of looking at how the company is doing, how consumer demand is holding up for the company's products, we have to say it looks really good. Maybe a little deceleration in terms of the increases in consumer demand, but overall up and to the right for the most part. One of the key areas we think for the future growth of Tesla is, we think this turns into a company that sells cars at a 10 to 15, maybe 20% profit margin, off of the showroom floor, if you want to call it that. But really has a unique capability to monetize that platform well into the future through subscriptions, software updates, and so on, the first of which being the full self-driving capability, which they've cut costs or cut the price on. I think we'll be able to get it for $99 or $199 per month, or $6,000 total cost, one-time outlay. This is the type of thing that I think Elon Musk is betting on, is the ability to monetize the vehicles that are on the road in a very big way, well beyond the initial purchase. And I think that's a good strategy. I think that's a lot of what, kind of following Apple's lead, what they did with the iPhone and building out that ecosystem. But, we see full self-driving searches absolutely surging on these price cuts, and with the release of the latest versioning of that shows really, really high quality driving in city and highway conditions. Also, from a web visit standpoint, this has been most closely correlated with revenue over the past 5 or 6 years. Again, surging, a really nice, steady increase in web visits. We think people are very attracted to these products, even if they're turned off by the CEO's antics and politics. Ultimately, Tesla cars are going to be bought by people who want, an electric vehicle, low maintenance and high performance, and Tesla continues to deliver on those metrics.
All right, Andy, you got a little. Let's have some fun with this. If you've been reading any of the news out of the United Arab Emirates, right? They've been seeding the clouds. They've been worried about rain and weather, so they've been seeding the clouds in the United Arab Emirates. You know what their biggest problem now is? Flooding from seeding the clouds. So, is this, I pull that forward over to this discussion because is the infrastructure going to catch up to what Tesla's doing? This is what happens in the world we live in. We make plans and we don't have the infrastructure, right? I mean, Tesla, I can see the world going to electric vehicles when the infrastructure catches up more. And my second question to you is, when will we ever see Tesla as more than an EV car company? Like robotics, like the Powerwall and energy and charging and all these other things they do. When can we start to look at it like that instead of just an EV company? Answer both, please.
Yeah, I think on the second question, when will we see Tesla as more than an EV company? I think if you're forward looking enough, you already can. I think,
right.
It's kind of like we hear, Michael Saylor and others talk about Bitcoin, is that it's going to be slowly and then suddenly. I think one day in the future, we'll just wake up and we'll say, holy cow, Elon Musk has built out an energy company, a power storage company, a robotics company, and a mobile vehicle software device company that we completely underestimated for several years. almost by intention. You almost sometimes feel like Elon Musk, kind of does this stuff for fun to kind of get the weak hands out of the stock at some point. But on your first question, from an infrastructure perspective, I really think that that's an overblown phenomenon. There's certain areas like Hawaii, California, where some of these supercharging stations get enormous lines, especially during high traffic times. And it looks really bad because that's a horrible experience for a few people. But for most people that buy Teslas, it's as simple as plugging it in your garage overnight, driving the car, and then plugging again the next day and always being full in the morning. Most people are not using these cars for massive road trips. They're not ready for that, I don't think. This is not a road trip car, but for most people's driving that they do most of the time, it's a fantastic solution, and the infrastructure is already built into their own home.
Yeah, I think I've always stated that, like, why are you buying an electric car if you don't have a plug-in at home? I've never understood that, especially here in Chicago with, the cold weather negatively affects the batteries at that point. But maybe that's not me. But Andy, I wanted to kind of hit on the happiness levels here because, that's part of the problem. The CEO, he turns people on, he turns people off. He's there's not a lot of middle ground there as far as Elon Musk goes, but he's investing in the future. He's taking risks with this company. Are we seeing happiness levels pull back at all as the stock prices come down? Because it seems like your data is still reflective that this stock's, oversold.
Yeah, I definitely think it's oversold, but oversold can get more oversold. That's one thing that we've learned on both sides of the equation. We've talked about a lot. Oversold can get more oversold. Overbought can get more overbought until eventually the market reaches a breaking point in either direction. But yeah, I think the CEO, Elon Musk is not going to shut up just to sell a few more cars. I think he has, some ambitions that go well beyond, the financials of the company quarter to quarter, and I think that's frustrating for Wall Street for good reason, and I do think it's turning people off. We see LikeFolio happiness levels go down every single time Elon Musk gets involved in a hyper political discussion on X, and so it is definitely a concern, especially for near-term investors. But I think for long-term investors, you kind of got to say, hey, this is a guy who can land rockets on surfboards. I think he can make pretty good cars, and we're going to continue to bet on somebody that has had his success rate over time, and we have to have a long-term view on this and expect that things turn around. Every time we've gotten to the point where we thought Tesla was ready to be thrown into the garbage bin, it's been a massive upswing from there to new all-time highs, and I don't think this time is any different.
Got an earnings score for us, Andy, going into this report?
Yeah, it's so sold down. We're actually very bullish on this. We think the short selling is overdone. This could actually turn into a little bit of a relief rally that could get some legs, as we move on into the end of April.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down Tesla data for us.